For the longest time, most companies have looked at quality as a cost, right? Something you have to control, something to minimize. But what if that's completely backwards? Today, we're going to make the business case for total quality management, and we're going to flip that old idea on its head. We'll see how it's not an expense, it's a powerful, strategic investment that can give you a serious competitive advantage. And right off the bat, we've got a pretty stark warning from Juran, one of the true pioneers in this field. Think about it. As far back as 1951, he was saying that quality isn't just a nice feature. Nope, it's about survival. Unless you're the only game in town, poor quality is a death sentence. The stakes really couldn't be any higher. Okay, so if quality is that critical for just staying afloat, you'd think every business would have it totally dialed in. But, well, that's where things get complicated. Here's the dilemma that keeps executives up at night. Every company is pouring tons of money and resources into improving quality, from initial design all the way to customer support. But ask them to measure the actual financial return on that spending? That's tough. They know it's important, but they can't easily slap a dollar figure on it. And so it ends up feeling more like a leap of faith than a smart, calculated business move. So to try and solve this, for decades, the go-to framework has been this thing called the cost of quality, or COQ for short. Let's take a quick look at how it's supposed to work. The whole model boils down to a classic trade-off. On one side, you have what are called conformance costs. Just think of this as your investment, the money you spend upfront on prevention, like training your staff, and on appraisal, like inspecting and testing. Then on the other side, you've got non-conformance costs. This is the bill that comes due when you fail. Things like having to rework products, scrapping materials, and even worse, dealing with warranty claims and losing angry customers. The logic is simple. You can either pay now, or you're going to pay a whole lot more later. And you can really see the payoff here. The data shows this incredibly consistent pattern. As a company starts to put more money into that prevention and appraisal bucket, its failure costs don't just go down a little bit. They absolutely plummet. This really visualizes that trade-off in action. But here's the catch. This is where the old model really falls apart. It's totally obsessed with one thing, minimizing cost. But what if the real goal isn't just to spend less money? What if it's about earning more money? This tunnel vision on cutting costs completely misses the much bigger picture of driving profit and creating long-term strategic value. And this is where we have to make a huge mental shift. We need to move away from that cost-cutting obsession and start framing quality as what it really is, a strategic investment. This is the million-dollar question, isn't it? If you're the manager walking into that boardroom asking for a bigger budget for a new quality initiative, you can't just say, "Trust me." You have to speak their language. You have to prove the return on investment. The answer is to borrow a really powerful tool from the world of finance, the capital budgeting approach. It's like this. You would never build a new factory without first running the numbers on its future earnings, right? This approach does the exact same thing, but for quality programs. It uses serious financial metrics, like net present value, to actually project the long-term economic value that a quality initiative is going to generate. It turns that vague quality is good idea into a rock-solid business case. And that one little shift, it's a total game changer. It completely reframes the conversation in the C-suite. Suddenly, the question isn't, how can we trim this expense? It's, how can we make this smart investment to grow our profits? So let's say you've made the investment case. What happens next? What's the actual payoff out in the marketplace? Well, this is where quality becomes your secret weapon. So, do customers even care about all this? Oh, yeah. The data is just overwhelming. A staggering 80% of consumers around the world say that quality is just as important, if not more important than price. This isn't some niche preference. This is a massive global driver of buying decisions. So, how do the best companies actually pull this off? Well, the research points to 4 key things. First, they deliver a fantastic quality to price value for their customers. Second, quality isn't stuck in one department. It's woven through R&D, production, marketing, the whole shebang. Third, they work hard to build a really strong, ongoing relationship with their customers. And finally, they get their own people fired up and focused on delivering quality. These are the real pillars for turning TQM into more sales. And this visual really brings it all together. TQM isn't a one-dimensional problem. It's a 3-dimensional strategy. You have to balance the technical side, meeting all the standards and specs. You have to balance the economic side, managing the costs and making it profitable. And you have to balance the social side, which is all about what the customer actually needs and wants. And right there in the middle, holding it all together, is quality. Now, what's so cool is that this whole philosophy of total quality management, it's not some dusty old idea from a textbook. It's actually the launch pad for the next giant leap in quality, and this one is being supercharged by technology. So welcome to the era of Quality 4.0. This is what happens when TQM gets a massive tech upgrade. We're talking about using all the tools of Industry 4.0, big data, the Internet of Things, artificial intelligence, to take quality to a whole new level. The goal isn't just to react and catch errors anymore. The goal is to be predictive, to anticipate and prevent issues before they ever have a chance to happen. If you look at how we've handled quality over the years, there's a really clear story. We started with basic inspection, just finding mistakes at the end of the production line. Then we got a little smarter with quality control, using statistics to manage things. TQM was a huge step forward because it was about designing quality into the entire system. But now, Quality 4.0 is the ultimate evolution, using data to see the future and stop problems before they start. So at the end of the day, it all comes down to this one critical question you have to ask yourself about your own organization. Is your quality strategy still stuck in the past, viewed as just another expense on the balance sheet to be controlled? Or are you ready to see it for what it truly is, your single biggest investment in building your next competitive edge?